The global edge AI market is charging toward $378 billion by 2030. The drone industry alone projected to hit $57.8 billion in that same window. And here's the part most investors are completely sleeping on. There's a small NASDAQ-listed company and sitting near $6 a share right now that just got selected by the U.S. Army to power its approved battlefield drone program. Not a rumor, not a pitch deck, already shipping, already generating revenue, and it gets deeper. This same company locked in a multi-year agreement with a major U.S. wireless carrier to modernize over 50,000 backup power systems nationwide. That's recurring subscription revenue, not one-time hardware sales. This has barely made a ripple on Wall Street. While everybody's talking about NVIDIA and the trillion-dollar AI darlings, this little company is quietly embedding its technology into U.S. Army drones, Qualcomm chipsets, and America's critical wireless infrastructure. And the stock is still in the single digits. Back when this stock hit its 52-week high of $8.24, everything was just beginning to line up. Today it's pulled back to just over $6. Same company, stronger partnerships, more defense contracts, better positioned. History doesn't always repeat itself, my friend. But it sure does rhyme. If you're 40+, building toward retirement, trying to compound real money in real companies, hit that like button and subscribe. I'm aiming for 500 likes on this one. Let's get into it. All right, cards on the table. We're breaking down Lantronix Incorporated. Ticker LTRX, NASDAQ listed. Trading around $6.07 as of this recording, near penny stock territory and feel, technically above it. At market cap around $230 million. Small company? Yes. But the technology and the partnerships behind it, those belong in a much bigger conversation. Lantronix builds edge AI and industrial IoT solutions. The intelligent computing brain that goes inside machines and devices, right where data is created, not miles away in a cloud server. Right there in real time. Think drones making instant targeting decisions without internet. Utility infrastructure self-diagnosing failures before the power goes out on your street. And they're doing it as the only North America-based Qualcomm partner, offering fully TAA and NDAA compliant system-on-module solutions. That compliance tag is the entry ticket to every U.S. defense contract on the table. Now let's get honest about the numbers, because you're here for the truth, not a sales pitch. Full year fiscal 2025 revenue, $123 million. Down from fiscal 2024. But here's what the headline misses. One customer, Gridspertise, represented 25% of prior year revenue and wound down. Strip that out and the core business actually grew 4% year over year. That's the real signal. Most recent quarter, fiscal Q2 of 2026, ended December 31st, 2025. $29.8 million in revenue. Non-GAAP earnings per share, positive 4 cents. Essentially break even on an adjusted basis while investing in growth. Cash on hand, $23 million. No emergency financing. Clean runway. Gross margin running 45% to 50% non-GAAP. Operating expenses cut by $4.5 million year over year. And levered free cash flow over the trailing 12 months, positive $12.7 million. This is not a company burning its reserves. It's generating real cash during a transition year. Enterprise value around $228 million. Trailing revenue $118 million. EV to revenue 1.9 times. Comparable IoT edge companies with defense exposure trade at 3 to 5 times. Lantronix is priced as if the Army contracts, the Qualcomm partnership, and the carrier deal simply don't exist. That's the mispricing. Tight float at 39 to 40 million shares fully diluted. When institutional money moves in, there aren't enough shares to absorb it quietly. And that cuts hard in your favor when a catalyst hits. 4 analysts now cover LTRX, every single one rated buy. Average price target $9.13. High target $10. That's 50% to 65% upside from today's price. Base case analyst math. Now here's what nobody in your 401k statement is telling you. The Department of Defense has earmarked more than $13 billion for unmanned platforms in fiscal 2026. Lantronix is already inside that money flow. Their Edge AI module powers the Black Widow drone, built by Teal Drones under the U.S. Army's Short-Range Reconnaissance Program. Shipments have started. Revenue is live. Management is now engaged with over 15 drone OEM manufacturers. Each module runs about $500 in average selling price. Each customer represents an estimated $4 to $5 million in annualized revenue. Drone guidance for fiscal 2026 was just raised to $8 to $12 million. By fiscal 2027, management projects drones at 15 to 20% of total revenue, potentially $20 to $30 million from drones alone. The ecosystem around this is real. Teledyne FLIR for thermal drone payloads. Safe Pro Group co-developing AI landmine detection for the U.S. Army's ATAC tactical platform. Trillium Engineering for precision military imaging. That one announcement moved the stock 12% in a single session. This isn't one contract. It's an ecosystem locking in around Lantronix. Ecosystems, once locked in, are hard to displace. On the infrastructure side, the wireless carrier deal modernizes 50,000 backup power systems through the Perception SaaS platform, monthly recurring revenue on a growing device base. As that mix grows, margins improve, and this starts to look far more like a software business. Now, a good friend tells you both sides. Revenue fell 23% year over year in fiscal 2025. Losing Gridspertise hurt. Customer concentration is the number one risk to watch. The net loss over the trailing 12 months was approximately $10 million on a GAAP basis, not yet profitable by standard accounting. Tariffs and supply chain shifts can squeeze margins, though most U.S.-bound production has already moved outside China. And with a tight float, 20% swings in a session are possible. If that keeps you up at night, this isn't your position. 3 honest scenarios. Bear case, $3 to $4. Drone ramp disappoints, ARR builds slowly. Dilutive financing compresses the multiple. Base case, $8 to $10. Drone revenue hits guidance high end. Carrier deal expands, free cash flow holds. At 3 times revenue on $130 to $140 million forward. That's your number. Bull case, $12 to $16. Lantronix becomes the NDAA compliant standard across U.S. defense drone programs. Revenue scales toward $160 million with expanding software margins. At 4 to 5 times revenue, the stock re-rates. Picture 2 investors 5 years from now. One says, I saw that Edge AI play with the Army drones in early 2026. Made sense. I just kept waiting for a more comfortable price. The other says, I did the work. Understood the Qualcomm moat, the NDAA compliance advantage, the carrier recurring revenue deal. Sized it at 2 to 3% of my portfolio. Small enough that being wrong doesn't sting. Big enough that being right actually matters. Held through the noise. Which one compounded their wealth? That's the actual decision in front of you right now. Lantronix at $6.07 is priced like a forgotten hardware company. The reality is an Edge AI platform business. Qualcomm moat. U.S. Army contracts in production. National carrier SaaS ramping. 4 analysts all saying, buy with targets up to $10. Trailing revenue $118 million. Free cash flow positive. $23 million in cash. Debt paid down from $14.7 million to $9.7 million in 1 year. The market hasn't caught up yet. The question is whether you will. Drop your take in the comments. I read every single one. This is educational analysis, not financial advice. Do your own due diligence before committing $1. If this gave you real value, smash that like button, subscribe, and hit notifications. I'm aiming for 500 likes on this one. In next, another underfollowed opportunity. Real technology, compressed valuation, catalyst the crowd hasn't priced in yet. Stay disciplined, stay patient, stay informed. The best investors don't chase headlines. They find solid companies before the headlines find them. See you in the next one.